Thinking about buying in Melbourne? We're talking Frankston versus Brimbank.
Brimbank, population-wise, is 198,000. Frankston, 144,000.
If you're looking at buying a property in Melbourne in 2025, how do you know which one's a better choice?
Frankston currently shows stronger recovery signs and gentrification signals, but
Both locations have their pros and cons, so let's deep dive into more of the detail. Together with data analyst and property investor Gilbert Melgar.
Brimbank, what's it looking like?
long-term growth has been really weak.
Frankston versus Brimbank, which way should they really be leaning?
Both poses a potential opportunity, but I'll be leaning more on
If you've been thinking about buying in the Melbourne property market in 2025 but are struggling to choose a location, you're really going to enjoy this episode. My name's Todd Sloan. This is the Pizza and Property Podcast, and this episode is powered by Investor Kit, Property Strats, Suburbs Finder, and Future Proof Property Advisory. More about our amazing show sponsors in the show notes below. But right now, let's jump into this episode with Gilbert Melgar.
Gilbert Melgar, it's time to talk suburbs and LGAs. How you going?
good to be here again.
Mate, it is good to have you here. And there's going to be a lot of people leaning forward with this episode because Melbourne is a hot topic at the moment. It keeps getting requested. I feel like we're possibly talking about it too much, but people keep asking for more of it. And right now, we're going to be deep diving into a comparison of the two LGAs that are on a lot of people's lips as to which one is potentially the better way to move forward. We're talking about some suburbs, Sunshine West versus Frankston North, but more specifically the LGAs of Frankston and Brimbank. Is there anything you wanted to set the stage with before we really start pulling apart this deep dive, man? Because we go deep with what you prepared.
No, I'm excited to it.
Fantastic, man. Let's jump straight in with the first one. What do you want to start with, Frankston or Brimbank?
We can go to Frankston.
All right, done. Where are we starting?
Distance-wise, it's 40 kilometers southeast of Melbourne. Right? Population-wise, 144,000. GRP, or gross regional product, 7 billion. And unemployment rate at 5.6%. Development approvals, 266 for houses and 66 for units as of 2024.
So 266. Can we get a bit of perspective on that? Is that a lot? Is that a little? What do people need to know?
It's 25% less compared to the DA approval on the previous year, which was 2023.
Got it. It's 25%. So
21.3%.
Okay, so it's
2023, it was 338. In 2024, it was 266. That is for houses.
Got it. Okay, and so for units, you've got 66. Is that right?
66 for 2024, and 2023, it was 23. So there are more units that got approved.
Got it. Okay, so there is still more like housing supply, if you will, but not more actual houses being built.
Yep.
It's more units.
Exactly. Plus, we got to factor in not 100% of those got approved will go to the build process.
Makes perfect sense. So in terms of public housing, I know you've got this on the list here, and Frankston and Brimbank are both areas that have got some kind of like lower socioeconomic sort of sections to them. Is this still pretty high? Is it just staying exactly as it is? What do we need to know there?
Well, it is at 1.01% at the moment, right? So it is a negligible amount compared to the number of houses within that LGA.
That's tiny, actually. I thought it'd be way more than that.
But the thing is, in terms of the number-wise, that is equivalent, that 1.01% is equivalent to 1,421. Right? So out of 820 of those 1,481, 820 are houses.
Right. Okay.
And then
the others are units.
The others are townhouses, which is 483, that's equivalent to 34%. And apartment units, it's 109. So there are less apartment units.
Got it. And now if we're talking house prices as well, because the median that you got here, this is the median for the LGA, not for Frankston.
For the LGA.
For the whole LGA.
Yes.
Okay. What's the median here? And then can we actually jump into a little bit of the median of Frankston North? Because I think that's what's on a lot of investors' kind of minds as well. And Carrum Downs. I keep getting requests for Carrum Downs.
For Frankston, median price as an LGA, it's 783,500. And for the suburb of Frankston North, that's 607,250.
607,000.
Yep. So it's less or below the average or below the median of the LGA, right?
Yeah, and significantly below. It's not like it's 750 and it's just a touch under.
Yep, exactly.
Okay. And Carrum Downs?
Carrum Downs is 711, 500. Yep.
Okay, so still below?
Still below.
But nowhere near as below as Frankston North.
Yes.
Got it. All right, so before we move on to Brimbank, a little bit more about like Sunshine West, tell me a little bit more metrics, because you've got a few more like growth numbers, yields, things like that to unpack.
Yep. So over the past 3 months, the median price for the LGA has increased by 1.75%. Right?
1.75.
It's not a lot, but it's still a good improvement.
But it wasn't that long ago it was going backwards, wasn't it?
Yes, that's correct. And for the 12-month growth, it's 1.10%. So if we're going to look at it on a linear or a line in a graph, it's going up.
I feel like this is about as early adopter as it gets, really, isn't it?
Can be.
Yeah. Okay. All right. So 1.1% over 12 months, rental yield. Now, this is one of the big killers with Melbourne. You're never getting Perth-style yields or Brisbane-style yields. Like, what is it for Frankston?
It's 3.85% rental yield.
Okay. Yeah. So not that good. Like.
Yeah, I'd say.
Yeah, I personally wouldn't be happy with 3.8. But again, this is the median rental yield. So it's not saying that you can't pull a deal together that maybe has a 4 in front of it or potentially a 5 if maybe you were to roll up your sleeves or subdivide or value add in some way.
And when you're good at negotiating.
That too as well. You get this for under market value, that's a whole different ball game.
Yep.
All right, cool, man. Anything else you wanted to talk about with Frankston before we move on to Brimbank?
And the rental growth over the past 3 years, the rent has grown by 28.9%, which is equivalent to $130. If you'll notice, the price has been steadily going up. Not significant, but it's going up. And the rent has gone up as well.
So the past 3 years, I feel like most of the country rents have almost doubled, if not doubled and then some in a lot of cases. Whereas over the past 3 years, in Frankston, you're saying they haven't even gone up by 50%. They're just 28%.
Yeah, just 28.9. Yeah.
Okay. All right. So still, as much as that yield might not be looking attractive, we got to assess this on its potential for later rather than its existence as it is now.
Yes.
Got it. Mate, this is looking good. So now how does this compare to Brimbank?
Brimbank, compared to Frankston, it's closer to Melbourne CBD, 15 kilometers away, west of Melbourne. Right? And population-wise has more, which is 198,000. So more people living within that LGA.
Sounds like the size of Cairns. Okay.
I'd say so, yeah.
Yeah.
And the gross regional product is bigger as well. It's 11 billion.
Tell me why that matters. Like, is this purely just because there's an extra 60,000 people and it's like a per capita kind of thing? It's bigger, or is it like no? Sunshine actually has more industry, more like why? Why is this good?
It is because the population is bigger. Because we look at the industry of employment, it's pretty much same. So the main for Frankston is construction. Technical services and real estate services or hiring, which is pretty similar for Brimbank or Sunshine.
Got it. Okay, so as much as it's a significantly higher number, it kind of comes out in the wash when you take the population into account.
Yes.
Got it. That makes sense. Unemployment rate.
So unemployment rate, pretty similar. So 5.60 for Frankston, Brimbank, 5.9, 0.3%. more.
Can we compare that with an Australia average?
So unemployment rate compared to Melbourne or Greater Melbourne, it's 4.3%.
Okay, so it's higher than Greater Melbourne.
Yep. But Australia-wise, it's 4%.
So Melbourne's higher anyway, and then we're talking about 2 LGAs that are higher on top of the Australian average again. So got it. So essentially 2% above the Australian average. For anyone wondering right now, is that something to be concerned about? To go like, okay, well, this area, there's just like thousands more people that don't want to work. It's not going to grow. Like, how do they need to interpret this data?
I'd say it's something that we need to be aware or mindful of it. Right? But on the other hand, there's always going to be an opportunity, that one, right? Especially if we go, because we're just looking at an LGA level. And there will be opportunities within pockets of that LGA.
All right. So you're basically looking at it saying it's still an average. Don't tar the whole place with one brush. But even if you kind of do, it's still something that just needs to be taken into consideration. It's not like a controlling or deciding factor.
Yes, exactly. It's only one factor anyways, right?
I understand. All right. Now, DA approvals. This is a big one. Are we talking more houses getting built in Brimbank or less? And before you answer as well, because Brimbank is so much bigger, we're like 60,000, so almost, what is that, like 30% bigger than Frankston. Even if it is more, is it like percentage-wise the same?
Percentage-wise, yes, it's a bit close. But going to that question of yours, similar to Frankston, there are less. So the less approval that happens. So there are 18% less compared to where it got approved 2023.
And what was Frankston? It was 20% or 21% or something? So it's about the same amount of like fewer houses getting approved.
Yes, that's correct. So Frankston is around, going back is 21.3, while Brimbank is 18.08. So that's 553 during 2023 and 453 2024. So 100 approval less.
Yeah, okay. There's more pressure on the market potentially coming.
For houses.
For houses. Okay. So and units, similar story for Brimbank?
Similar story.
So more units being
more
built.
units. So previous year, 2023, it's 17 versus 90.
70 or 17?
17.
17 versus 90.
Yes.
Wow, so a lot more. All right, and as far as the affordability side of things, median house price, what are we looking at?
We're looking at 700,000. So entry level is a lot lower compared to Frankston.
This is still the thing that's nuts to me about Brimbank. Like 700,000, like 13, 14, 15 Ks away from the city in Melbourne. I know it's an isolated indicator. It's one thing. You shouldn't be making a decision on that. But that's, to me, that's a big thing. That's value right there.
Yep.
All right. Can we talk about a few of the most affordable and investor-friendly price points inside the LGA?
I think one of the most affordable would be Alvan Vale with a median house price of 612.
612,000.
Yes.
Okay. That's very affordable.
And the other one is Kings Park at 620.
All right. And so what's the higher end of Brimbank City Council?
That would be Killer at 1.1 million.
1.1. I've got to ask, for anyone that's not familiar with Melbourne, why? What's the difference? Like, are these two like just totally different ends of town? Is it more of a socio-economic thing? Is it a geographical? What is it?
Well, let's just put it this way. So in terms of socio-economic score, Killer has a score of 9, which is highly affluent within that LGA. And Sunshine West has 2. So it's
right. So, and this is like golf. The lower the score, the better.
the higher the score, the more affluent.
Gotcha.
I'd say,
Yeah,
the more advantage.
All right. So Kilo is basically looking at it as a more desirable place to live rather than Alban Vale.
Alban Vale and Sunshine West.
And Sunshine West. Okay. But as far as affordability is concerned, they're ticking all those boxes and then some.
Yes, that's correct.
Okay. Talk to me about growth. What's the last few months been like for the whole LGA?
Well, for the whole LGA, over 3 months, it didn't really go up. In fact, it has dropped by 0.5%.
It's gone backwards. Okay.
Yeah, gone backward. And 12 months ago, nothing as well.
What's your take? Do you reckon it's Brisbane in like 2017 and everyone's, or 2015, it's like, it's going to happen. And it's just, we're waiting another 5 years, or do you reckon we're about to pop?
Well, it depends on the strategy, right? So going back, I would say if you're if your strategy is just buy and hold long term, I'd say have a look at other areas. But if your strategy is manufacture growth or equity, then there's an opportunity there.
Let's talk about that a little bit more detail later, because I do think that that's something that really is very area specific. Some areas there's a lot more opportunity to actually like put some sweat equity or actually just subdivision, whatever it is, to manufacture that growth yourself. But let's move on from this. So it sounds like so bad news for Brimbank, basically. It's gone backwards 0.5%. And what about 12 months?
Nothing has changed. It's the same.
Just nothing. Nada.
All
right. And yield, about the same as Frankston?
Slightly lower at 3.71.
All right. So far, Frankston versus Brimbank, it's coming up Frankston.
Yes.
Okay. Let's keep going to see if it stays that way. What do we got next here, mate? We're talking long-term capital growth potential because right now you've painted two pictures of some pretty dismal capital growth for both areas realistically. One slightly better than the other, but still both pretty average. What's it looking like for the next kind of 5-10 years though? What are the projections?
Well, for Frankston, despite having a negative drop in house prices over past 3 years, and there has been a recent momentum over the past 3 and 12 months, which suggests a good recovery trend.
Okay.
And population is growing steadily, and there's a big, huge hospital project funded at 1.1 billion, which adds future demand.
That's like a big redevelopment, isn't it?
Yes, that's correct.
Yeah, okay. And 1.1 billion. So it's not just a little bit of an upgrade. They're really going at it.
Yes, that's correct.
And so in terms of that demand, comparing to Brimbank, what's it looking like?
So long-term growth has been really, really weak over the past 3 years. Units has declined as well. Population has fluctuated, right? Internal migration loses, but bolstered by overseas migration. In terms of infrastructure-wise, there's ring upgrade which supports long-term appeal. So that infrastructure project budget was between 250 to 500 million. So not as definitely significant compared to
Frankston.
Yep.
Okay, things are still coming up Frankston. All right, so let's break this up a little bit. What's the verdict then on the LGA? I feel like I don't really need to ask, but I'm going to.
Well, you know it already. Frankston currently shows stronger recovery signs and gentrification signals compared to Brimbank's internal, industry base and proximity to CBD.
Makes sense. Okay. So let's talk a little bit more about the value add side of things. How do both the areas compare? Because I know that from a renovation side of things, you really want to make sure there's enough reno meat in that sandwich. If the bottom end and the top end are really close together, there's not really too much point actually like pulling up your sleeves. And I don't mean DIY, I mean that kind of more metaphorically than anything. What do these two areas look like in side by side for value add?
So for value add, looking at Frankston, older homes on a large blocks, usually 600 square meter block.
So good size.
That alone ideal for renos, dual-lux or granny flat. Plus, it has a lower entry point, which is 607 compared to Sunshine West higher entry price of 685, which if we're going to do a reno, it will leave us, less room for value add.
Got it. All right. So talk to me a little bit more about the bottom end and the top end, how that actually works. Like, are you talking more subdivision potential, reno potential? What's the value add that you're kind of focusing on here and how you come to that?
So for Frankston wise, unrenovated property are sold around within the high 500s, so below 6, right? And the renovated ones recently sold 14th of March 2025, 735.
And so just to make sure, because Frankston having the same LGA as the suburb name, I don't want to get, you're talking about Frankston as the suburb now, yeah?
That's correct.
Got it. Okay. So high 5s is that bottom end and low 7s is that top end.
Yep.
Got it. Okay. And what about more like, are you talking Sunshine then, or are we talking Deer Park? Where do you want to talk in Brimbank?
So we're talking about Sunshine West.
Yep. Sunshine West.
Yep.
And how's it looking there?
Sunshine West, so unrenovated, within 650. So property. So it's currently on sale at the moment. So it was bought of 2022 for 720. So they renovated, and now it's being sold for between 850 to 890.
And that's a 3-bed, 1-bath, or?
It's a 3-bed, 1-bath.
Right. Okay. So it sounds like there's still decent amount in both Frankston and Sunshine then, or Sunshine West more specifically. But which one's got sort of more? If you were to really, again, this is a versus episode. If you were to make them compete, is Frankston coming out on top again?
Well, Frankston is the better pick for manufacturing growth and subdivision because you can play around with the numbers because of cheaper, or not cheaper, but lower entry level. Because if you can buy at a lower price,
Mm-hmm.
then if you can sell it at a higher, then you make money. But going back to if you go to Sunshine West,
Mm-hmm.
right, having a higher entry level, it goes back now. How low can you negotiate on the property? If you can get it at the same price as Frankston,
Mm-hmm.
then it's a win.
Understand. So you're talking about this from a value add perspective, but you're also introducing the skill of like negotiating, buying under market value, basically stacking different skills on top of each other, but then which area would be better to put that use into.
Exactly. Perfectly how you did it in your reno.
Yeah, that was good fun. Enjoyed that one. All right, so if someone has got $550 to like $750-ish to spend, they're looking at investing in Melbourne and they're not sure if they should go for better proximity to the city or if they should go that bit further out, well, it's a lot further out, but like an awesome proximity to the coast. Everything that you've said here, again, I feel like I know your answer, but which way should they really be leaning?
Well, I'd say both poses a potential opportunity.
Mm-hmm.
But I'll be leaning more on Frankston for the reason that because of there's a huge infrastructure happening in that area, which is the hospital. So I
Okay.
see that as an opportunity for future demand, or one of the future demand drivers.
All right, so it's not like an absolute slam dunk Frankston over Brimbank. It's more of a Frankston's kind of nudging ahead for a few key reasons.
Yes, that's correct.
Makes perfect sense. Man, Gilbert, this is always good fun to pull apart a versus with you, mate. I really enjoy this series. Is there any final words of wisdom or anything you want to leave with everyone today?
I'd say always crunch the numbers.
Love it, man. Gilbert Melgar from Suburbs Finder. Thank you so much for jumping on the show again, man.
Thanks for having me.